half of the properties that are going to market right now are selling on their first round. Half of them are not. It is a really unusual market that we're in because certain properties are still getting a ton of offers, and certain properties that should get a ton of offers aren't getting anything. And so it really is a very situational based market that we're in right now. The other thing too, which is good for buyers, is the trend line is on the way up. The trend line in here is the volume of new listings that are coming to market. And so this is from week 1 to week 15, which is where we're at now. And we're on the trend line up. So I was actually speaking with someone last week about signposts. It was the first time ever that they went to go order a signpost, no post to be had.
Crazy.
So that,
you mean like the sign with like the, for sale sign? Is that what you're talking
about? I don't hammer in the for sale signs. We go and like set them up.
No
but we
way.
hire a company to do it. No post.
There's no signs.
Yeah.
That's
So
crazy.
Never seen it, but that means that a lot of listings are coming to market. And
Alrighty, everybody, welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, and tonight we're going to be going over the Toronto market update for April, and we've got Emma Pace here to do that for you guys. So Emma, what's up? Say hello to everybody, and
what's
let's
up, everyone?
Get right into a Toronto market update. What's going on in Toronto?
It's slowing down, which is nice. Finally, I feel like for once we maybe have some good news for buyers. But let me share my screen. Let's go through the data together. But good to be back on here and do another monthly update for you guys. So, let's look at kind of what's happening month over month here. So, condos and condo towns, they're within like a 1% kind of ratio or variable on kind of either side of the coin there. So I would call that relatively flat on my end. Nothing too crazy in terms of movement, but condo prices last month were $822. We've seen them come up to about $831. So not a huge gap in terms of pricing. And then condo towns basically went from $975 down to $960. So we saw a little bit of a bump up last month, and then we basically reverted back, to kind of like our previous month's price point for condo towns. Semis made the biggest move to the upside, which basically went from 1.5 to 1.55. So they're up about 3%. And then detached, the biggest move to the downside, probably the most shocking number here, but we saw a massive upward tick from February until March. Now we're looking at basically just shy of 2.1 to 1.92. So we saw some massive movement to the downside on detached pricing.
Yeah, that's really interesting, Emma. Is there any like takeaways or insights that you think might like lead to that relationship where semis are slightly going up and detached are going down?
I think there's a big enough price gap between the two of them. And I think if we take just kind of like a traditional century home in Toronto, right? So like how I usually like to describe Toronto to most buyers or anybody that's not familiar with Toronto, it's like you have Toronto downtown, right? One of the oldest cities in the country. And then so you have all these heritage homes right around the downtown core. And then as we continue to go further away, you start to get the newer properties. With a lot of the heritage properties, or not even necessarily heritage designation, but we'll say century homes, the square footage of a semi-detached versus just a traditional detached is not that far off, right? To get a 3-bed, 2-bath semi and a 3-bed, 2-bath detached is like, we can make it happen. The inventory is there for both of them. And so I think right now, to save $500,000 and still get the same features. Yes, you're losing the fully detached kind of feature, but you're still getting the same square footage, price point, bedrooms, bathrooms, and saving $500K. I think that probably makes a pretty big impact for people.
Yeah, that completely makes sense to me because, I don't imagine those detached houses actually inherently have to come with a lot more privacy from your neighbors anyways. Like I find a lot of Toronto houses are pretty dense. Like it's a
Yeah.
fairly dense city. So yeah, that totally makes sense.
Yeah, and then I think like one of the graphs that I'm going to go over with you in a little bit will be super interesting to just kind of like the long-term value of both these semis and detached and why I'm bullish on them in the future. But yeah, I think, to save $500,000 or we'll say a really small condo downtown, like you could buy a semi and a studio together for the price of a detached right now.
Yeah.
So I think that's probably why. But if I go to my next slide, which I also think is super interesting, here are the sales by like GTA region. So we have Durham, Halton, Toronto, Peel, and York. And so if we look, all other areas except for Toronto itself have come down. Halton not significantly. Again, I'd say it's like relatively flat, but Durham almost 7%. And these numbers are composite, so they take into consideration condos, condo towns, semi, and detached. These aren't just detached prices. This is across the board for each of these regions. And so it's really interesting to see all of these areas had seen a drastic run up as a result of the pandemic. Toronto, probably the quote unquote underperformer of the pandemic, I would say, staying strong. And then we see all these other areas pulling back in price. And my thoughts to it are like the core, people are coming back to the core now. Restaurants are open, games are happening, concerts are happening, people are coming back to work, gas prices are up, people don't want to commute, traffic is back. And so I think people are reverting back to the core when they were like really rushing away from the core from 2020 to probably end of 2021. And so I'm starting to see people say, okay, well, the price disparity from purchasing a property in Peel at 1.3 to being able to purchase a semi in Toronto at 1.45 or whatever it happened to be, there's not that much disparity. If it's going to save me time and it's going to save me gas money, if I'm saving $500 a month in not commuting with gas, maybe that makes up the differential for, 50 grand or 75K or whatever it happens to be with borrowing cost.
Yeah, and like I'm sure we'll touch on this, but this seems to me like perhaps just a lot of supply hit the market, or perhaps some uncertainty in the market as well. Like it is fascinating looking at this chart because it goes back a few years, and like it seems to me like right now this chart's behaving like the April 2020 chart, which is it's just a fascinating point because there was probably a decent amount of supply at that time and a lot of uncertainty in the market, which is what we're basically looking at right now. So
yeah, and I think a lot of this is mental, right? Like a lot of real estate is driven by like overall mentality in the marketplace, how the media is reacting and all of that kind of stuff. And so, yeah, when you see uncertainty in the marketplace, you expect to see some of these red boxes on the charts and whatnot. But my belief truly is that the areas that will likely see the biggest downside as a result of these rate increases and stuff will be those like bedroom communities or commuter towns that don't necessarily have direct industry to prop up the marketplace. It's like people go there because they're more affordable and they're willing to make the commute, or they were planning on working from home. So like looking outside of Toronto, if I think like Kitchener, then you're probably looking at like Kitchener staying stronger and Cambridge coming down a bit, kind of thing, right? And so I think we're seeing the same thing with Toronto and then other areas of Toronto. And we kind of saw that, like it was definitely something that I noticed when they implemented the spec tax in 2017. And it was like, I remember having a client that had a property out in East Gwillimbury, which is just up near Barrie. And people were moving up there with these pre-construction properties with the intention of driving the hour and 10 or whatever happens to be to get downtown. And he called me to say, hey, should I consider selling my property? And I remember we looked at his comps, and they were probably around 1.3 at the time. And in like the matter of 4 or 5 weeks, we looked at the comps again, and it was like just under $1 million. And it was because there wasn't really much propping up the marketplace there, other than the fact that you could get an unbelievable house for 1.3 in comparison to what you could get anywhere else. But then when the prices started to drop, people were like, well, I don't want to go to East Gwillimbury. I'd rather cut my commute in half, buy a slightly smaller house, be in Markham, be a little bit closer to development, and to be able to be downtown. Maybe the house isn't as great, but I'm still getting it for like a decent discount at this point in time. And so I think everything just kind of moves a bit closer to the core.
Yeah, and you can see it, and it's worth noting on this chart too, like the trend line just about hockey sticks in 2020, or begins to do that hockey stick in 2020. Yeah. And so anybody experiencing like Durham right now, that -6%, like realistically, that's only bringing them back to December.
Like December, like somewhere between October and December, realistically. Yeah.
Yeah. And so when I'm thinking about that, like really, have you lost that much? Well, only if you bought, literally last month, maybe you're looking at that 7%, totally. But otherwise you're up big time from say last March or last May.
Totally. And I think like to that point, the important thing is if you did buy in January or February of this year, like don't just hit the panic button, because the most important thing about real estate is that you're in this for the long term. Or like, and even if you're a flipper, you have a short-term strategy that is the more preferable strategy. Right now, you better have a plan B and you better have a plan C. That, like, more so now than ever, you better be okay with your plan B and plan C. Like, of course, if you're a flipper, you want to exit with your plan A, but if it doesn't happen, like, you better be okay with that.
Yeah, absolutely. And I think it is, it's very wise, I believe, to look at charts like this that are expanded over a much longer time horizon than maybe the traditional flipper is looking at when they're thinking about their, 2-3 months in a project and then hopefully list and sell. Because if you follow any one of these lines, you'll see that it has some seasonality built into it. It has some accommodation for whatever's going on in the environment. So market factors, uncertainty, health problems, right? Pandemics, whatever, that's all kind of built into the trend line. And so you'll see that sometimes when we see this line bowing down like this, it's often just a waiting game.
Yeah, for sure. So, I mean, look, they say, like, what's the saying? It's real estate is a yo-yo on an escalator, right? So it goes up and down on the way up. And so if we look at that, it's a matter of long-term hold and being able to make sure that you're you have the financial wherewithal to withstand any of these ups and downs, right? And so timing the market or trying to buy at the absolute bottom or freaking out about buying at the absolute peak is it sucks in the short term, and it's scary because we're inherently more attracted to like negative emotions as human beings. But if you're prepared for the long term, I'm still extremely, extremely, extremely bullish on the outlook of Toronto real estate over the next 20 years. I'm not focusing on what's going to happen in the next 12 months with these rate hikes on the micro outlook of Toronto. Like, I'm focused on 20 years from now.
Yeah, I think that's a great outlook. Yeah, I think that's really useful for everybody here.
Cool. So one thing I like to go over is the condo prices, condos to detached pricing in Toronto, right? And so historically, we see the number hover around 2. And if anybody's actually followed my, I think we're probably going on month 14 or something like that of us doing these market updates. And so if you've watched any of my videos, you will have seen me discuss this before, but historically, the average detached price is 2 times as expensive as a condo price historically. If we look over like I think it's the last 25 years is what we were tracking. And so we were just over 2.5 last month, and now we're starting to see this regress closer to that 2%. We're still like really, really wide, but we're starting to get closer to this number. And now I think with what's happening in the marketplace, I have continued to see entry level price points, which I would call, $850 and below, stay really strong in today's marketplace. They're still getting multiple offers. It's maybe not 30, but to see 5 is still not uncommon in an entry level kind of price point, where if we're looking at closer to 2 million, there's not as much competition there, right? And I think the entry level price point in any marketplace is just always going to have a little bit more demand because there's just less barrier to entry at that kind of price point. So I'm curious to see this continue, but I think we'll see upward pressure here, and I wouldn't be surprised to see a little bit of downward pressure over here. And then that brings us closer to where this should be anyways.
Yeah, that totally lines up for me.
Cool. So let's talk about some of the important metrics. Now, I talk about months of inventory every single month. We are still really tight on inventory. We're starting to see inventory increase. However, I actually think that this number is slightly skewed. I wouldn't be surprised if it's actually closer to being over here, and I'll tell you why. Because if we look at this graph, I think is probably the most important or most interesting one of this entire presentation, and it is how many listings are being terminated. Like once an actual listing goes to market, are they selling or are they canceling those properties and just terminating them off the marketplace? Okay. And so what you'll notice is from, we'll say March 1st, this is kind of when we did the last update to now, and we're looking at like this blue trend line. I've highlighted both of them in purple. So on the left, you've got condos. On the right, you've got freeholds. Look at how drastically the trend line has moved up on both sides in the last 4 weeks. We've essentially doubled for both of them. And so that means that a lot of properties are hitting the market. Sellers haven't adjusted their expectations with what's happening in the marketplace because they're still expecting that they're going to get February pricing in April when the market has changed so drastically. And so what happens is if the agents don't set the right expectations before they go to market, they go to hold, let's say they go to hold offers, which means that they're trying to set it up for a bidding war. They don't get the offers that they're looking for, and then they cancel the listing, they terminate their listing, they take it off the market, and they put it back on the market the following week at whatever the price is that they would expect. So if we're talking about a semi-detached property and we use the earlier numbers, maybe they list their property at $999,000 and they wait for the week and they're expecting that they're going to get 1.5 million in bidding war. And they don't get the price that they're looking for. They therefore cancel their listing. It's now considered a termination, and they put the property back on the market the following week at the price that they're looking for, maybe 1.499. And so if I go to this next slide, you can see how many properties, this is showing how many properties are selling 20% or more above the asking price. And it's dropping off the face of the earth from March 1st to now as well. So these both work in tandem, right? How many are canceling and how many are selling above asking? And so this is showing that the market is leveling itself out. Now, this sounds scary if you're a seller, but if we look at this and we put all of these things in conjunction to understand what's actually happening in the market, this is why I think this number is actually skewed, because if they go back to market at 1.5 and the property looks like it sells within 7 days or it sells within 14 days, then we're looking at like, oh, it actually sold in half a month, but it was on the property for another 7 days beforehand, but it looks like 2 separate listings. So if that makes sense to you, Adam.
Yeah, no, absolutely. Like it seems like we're double counting, right?
Yeah, very much so.
Yeah, so that's a really interesting thing, right? My economics professor in first year said there's lies, there's damn lies, and then there's statistics.
Yes.
And this would seem to fit that shoe.
I believe so, and I think it's really hard. It's really hard for me to give exact numbers, but I have to kind of look at these graphs like one at a time. And then I put like, how does one graph affect the other? And in this one, it's like, oh, well, we're still in a seller's market. If we have this low of inventory, we're still in a seller's market. And I believe that that is true. We are not in as an extreme seller's market, like as much of an extreme seller's market as what we were at the beginning of the year. But I don't actually think that this months of inventory chart is as accurate as it likely was at the beginning of the year, because we didn't have this happening at the beginning of the year.
Yeah.
And so if we didn't see this happening, and let's say we just didn't allow people to terminate their listings, that wasn't allowed to happen. You weren't allowed to terminate, you weren't allowed to relist. I think this is probably closer to a month and a half. But I don't think this is telling the whole story. I think it looks better on paper for sellers than it actually is.
Got it. Yeah, no, that makes all the sense to me, actually.
Yeah. And so basically what's really important for any buyers or sellers to understand with these two numbers here, it's that half of the properties that are going to market right now are selling on their first round. Half of them are not. And so it's really hard for people to say, what's the best strategy for me to implement right now? It is a really unusual market that we're in, because certain properties are still getting a ton of offers, and certain properties that should get a ton of offers aren't getting anything. And so it really is a very situational based market that we're in right now, where let's take two different types of sellers to give you an example. One seller is an investor that has a vacant property, their tenants just moved out, and they put the property on the market. Okay. They have two outcomes with what they can do with their property. They can sell it at the price they want, and if they're not happy with it, they'll just put a tenant in it and they'll wait it out until next year, right? So seller motivation is probably not quite as high unless they actually need the capital for their investment on something else, but they have an exit strategy, right? So to be able to think that you're going to negotiate with that guy is and get some smoking deal is probably unlikely, because he has a very strong second plan of action for what he can do with that property. Now, the second seller that we discuss, and this is probably where you find the internal motivation and the good deals, are people who have maybe already purchased another home and they're closing on their home in June or July. And now they're in a bit of a pressure crunch where they need to get their current property sold in order to close on this next house. They don't have necessarily a plan B. They have one plan, and that is to get their property sold. And if you're the only buyer that comes to the table in this unusual market, that's maybe where you find the great deal.
Yeah, I mean, particularly if this person's taken on a bridge loan or something of that nature to put down the deposit on their next property, right? Yeah. Like they've tapped into some sort of loan, or they pulled equity out of their house, or they've drawn from their cash reserves. There's something they've done to be able to put Toronto takes substantial deposits from my perspective.
Yeah.
So, there's reasons, there's actual financial motivation for them to want to move forward.
Yeah.
And I mean, there's deals in every market too, right? I think that has to be said.
For sure. I think it's like you have to read the play, to use a sports analogy. You have to read the play with any given property as to what the motivation is and what the likelihood is. And as agents, it's our responsibility to explain that and set the right expectations with our clients. Because in my opinion, the number of terminations that are happening or maybe because agents are setting February expectations in an April market with changing dynamics.
Yeah, I could see that all day, right? We're going to use this cool pricing strategy. It's totally going to help us out. We get all these crazy bids.
Yeah.
And then that doesn't happen, right? And now we have to rethink, relist, maybe put a better strategy up.
I think it was like 2 or 3 weeks ago that it was the first time in my entire career I actually had 4 people call me to say, hey, all 3 of them happened to be in Peel region, 1 happened to be in Durham, both of the more changing markets, I would say, and said, hey, look, I'm under contract with another agent. I was first like, okay, I can't help you if you're under contract with another agent. And they were like, can we pay you to consult? Can we pay you a consulting fee to help us understand what the strategy should be and where we should go from here? Because our agents are out of ideas. And I'm like, I can't help you if you're under contract with another agent. But for 4 people to call me in the same week to say we're under contract with somebody and they don't know what they're doing, I've never had that in my entire career. It made me feel really good because it, made me realize that the marketplace obviously thinks that I have some value, but that's a really tough spot to be in. And if 4 people call in the same week, it's like I've literally never had that. Super unusual, and that is a really strong indicator of a changing market. And to make sure, like, you should be working with someone who has experience in a changing market, people who have dealt with the stress test implications, people who have dealt with the implementation of the foreign buyers tax, and like what happens when these this type of dynamic changes in the market, and how does it react. And as we discussed earlier, I think oftentimes there's a really big mental shift that we have to get over, and we need to understand how that's gonna like progress in the long-term market at the end of the day.
Yeah, I mean, that's the classic talent versus skill argument, right? Everybody's looked very intelligent in the last couple of years of this market as that chart was hockey sticking. It was probably very easy to sell houses, and probably very easy to talk to your clients about really aggressive pricing strategies and bidding wars.
Yeah.
And this is where, we often see people rise to their level of incompetence, right? And so if they don't have the skills or even just simply the experience to have dealt with these uncertain times, and uncertainty in the market, that's where I think people could be getting sold the wrong story. And the thing is, people have had success with that strategy in the past, but it's different if the market's changing, right? We have to change up our strategy and tactics.
It's the we hear it all the time on our side of things, like, hey, I want to work with family or friends, right?
Yeah.
And it's like at the beginning of the year, if you look at like the termination percentages of 11% or 14 or whatever, that means like pretty much everything that was getting listed was selling. Family and friends, an amazing time to work with family and friends, because you could have literally put up a listing without pictures, probably would have sold at the beginning of the year, right? As this trend line continues upwards and you're starting to see more terminations and things are getting more challenging on the listing side, probably should opt to interview several agents and use the person who is actually going to do the job. When the market is easy, work with family and friends, right? Give them the business. That's okay, because it's pretty hard to screw it up when there's 1 million buyers per property and you want them to list your property. But when nobody's showing up to the door and you need some explanations as to what we can do to actually get this thing sold at the highest price in the shortest amount of time, you better work with someone who knows what the hell they're doing.
Yeah, that couldn't have been said better, Emma. That's fantastic.
Cool. So the other thing too, which is good for buyers, is the trend line is on the way up. So I just want to look at the actual line here. Don't look at like the actual columns or tallies, but the trend line in here is the volume of new listings that are coming to market. And so this is from week 1 to week 15, which is where we're at now. And we're on the trend line up. So I was actually speaking with someone last week about signposts. It was the first time ever that they went to go order a signpost, no post to be had.
Crazy.
So that,
you mean like the sign with like the for sale sign? Is that what you're talking
about? I don't hammer in the for sale signs. We go and like set them up. But we hire a company to do it. No post.
There's no signs.
Yeah.
That's
So
crazy.
Never seen it. But that means that a lot of listings are coming to market. And I know, for instance, like my stager, I've worked with her for 6 years now. She won't take on any new clients at this point in time. She'll only work with her existing clientele. She's like, first of all, I don't have the inventory, because I don't like rental supply chain issues are still there. They're getting better, but they're still there. She's like, I don't know if I can get rental inventory for couches and all this kind of stuff. So the good news for buyers is like, there are more listings coming to market. There's definitely going to be some selection, less ideal for sellers. So you cannot skimp on your marketing right now. If you're going to market with your property, like, you have to give it the best possible effort that you can, because you actually do have competition on the marketplace. You're probably not the only person out there right now. And if you have some unsavory features about your property, like it's actually funny. If you went back to my January market analysis, I'm like, yeah, if your property isn't great, like you don't have parking, or like you have a shitty view or whatever it is, not a problem. This is a good time to sell. There's nobody else out there, and all of the unsavory properties are still selling at the same prices as everything else because there's nothing else to sell. No longer. Like, that's not happening anymore. You don't have parking, you need to make an adjustment for it. The unsavory features of a property are really being magnified in today's marketplace. But the properties that are AAA properties, like on a great street, great school district, with parking, turnkey, those are the ones that are selling for top dollar and still getting a lot of attraction right now.
Yeah, that's awesome insight, Emma. I love the sort of so what approach to this analysis, right? Of like, okay, what does this really mean when there's more listings? Like, yep, time to pivot strategies, do the thing, get the staging, improve the value if you can possibly, or potentially have to make that adjustment downward on price.
Yeah, it's like you have to be realistic with your expectations. This is what I was talking about earlier with you. And this is, I think, the long-term forecast of why I'm very bullish on the semi-detached and detached marketplaces. So the blue line is single family home completions, or single family homes that are coming to completion starting in the early 2000s and then, forward to basically 2020, 2021 right now. And the yellow or orange line would be population growth. And so if anybody's been tracking our immigration statistics or our plan for immigration, we're looking at bringing in about 430,000 immigrants per year for, I think, like the next at least 3 years right now. And so we see single family homes coming to completion on a nosedive down, and we see population growth on a massive trajectory to the upside. Obviously, we see a big dip with COVID there, but my thoughts are that we're going to have larger pressure on multifamily housing going forward. Development costs, material costs, labor costs, red tape in terms of building. It doesn't actually make sense for builders. They're not incentivized to build single family detached properties anymore. You and I both know in London, if you drive around to any new development, it's all townhouses for the most part, right? It's all townhouses. And so spaces are increasingly going to become smaller. There's going to be larger pressure on multifamily housing. And so I actually think the real opportunities in today's market, and what I'm actually focusing on with my clients, are transitioning them from their condos to, it technically wouldn't be a single family dwelling. It would be kind of like a primary dwelling with a secondary suite, so that they can maintain their monthly expenses. And there's really no difference because they're mitigating their maintenance fees, and then they have the rental income from the basement. So they have the transactional cost of moving to something bigger, but they're basically holding this, what I would call like a Michael Jordan rookie card in 20 years from now when it comes to real estate, like land close to the core with some type of single family home that they can have because they're not making any more of them. And they're doing it for a one-time transactional cost, because when they decide they want the whole house and they have 2 kids and they need the space, they just ask the tenant to leave. They take over that space for themselves, and then they actually don't have the cost of asking me to sell the house or to pay their land transfer tax again. They do that now, and they reserve that space for themselves later, because it's going to be much more challenging to find that housing stock in the future, according to this trend line.
Yeah, that's super insightful. And honestly, just to speak to that supply of these single family completions, I wouldn't be shocked to find out that this chart actually has some lag to it, so that you see that there's actually kind of some houses still being completed, and it looks like it's on an upswing, but there's probably a lot of supply chain issues and material issues and contractor issues that are not yet reflected on this chart. Which should theoretically push it further down, honestly. So
I would think
exciting.
So too. Yeah, and I think look, when we think about how do we buy rare things, where do we get the Charizards or the Michael Jordan cards of real estate, and how do we forecast that right now? And I think it's like buying single family homes close to the core of any city that has internal industry that drives that particular city. So like a London, Toronto, Kitchener, whatever it happens to be, like buying single family homes close to the core there where the commute is very minimal in comparison to just like buying a single family home in a bedroom community or a commuter town. I'm very bullish on that long term.
Yeah,
Like,
that's exciting. And sometimes we find too, sometimes those properties are honestly a bit less right now as well. Like if I'm much more familiar with London, so I can only speak to that market. But
yeah,
downtown London is quite a bit cheaper than some of the outskirts and even some of the bedroom communities now. But that's not going to say that that relationship doesn't change in the future if supply slows down.
yeah. And I mean, like, I think there's going to be, some people in the comments here that say, okay, well, yeah, they're building like detached homes in and around where I am. And don't get me wrong, there's still going to be builders that are building detached homes. It's what is the commute to be able to get to the larger cities, right? And so that's why I'm bullish on buying these things in close proximity to these cities, because there's no incentive for any builder to build a detached property in Toronto core right now. It might be like one guy who tears down a house and rebuilds. We're not building communities of them. We're building condos because we have so many people that are coming to Toronto. We already don't have enough space for these people with this plan of building multifamily housing. So the only way to make accommodations for our immigration plans is to build more housing, and I think that's going to be completed through multifamily housing stock, not single family homes.
Yeah, I mean, we're talking. Look at the chart. Look at the supply of people.
Yeah,
We're
the
talking
people.
500,000 people almost
Yeah,
there, right, year over year.
yeah,
So that's a fantastic number when we're thinking about housing.
yeah, for sure. So, anyways, super interesting. Hope you guys like this one. I thought it was a good one to review. And then, yeah, so let's go through the condo stuff super quick. Because condos have stayed relatively strong for the most part. I usually go through this graph. I did a second one for this particular video because I think it's really important to break it down even further, just given what's going on in the marketplace. So condo sales are up, total number of actual sales by 16% month over month. Toronto West, which is the purple circle here, basically went from 750 to 764 month over month. So we saw just shy of 2% growth there. Nothing too crazy. Toronto Central went from 863 to 879. The bulk of that is going to be comprised in kind of like the lower bottom of the circle there, because that's downtown. And then Toronto East, again, relatively flat kind of across the board for all of these three. These are kind of where you see the bulk of the condo stock, but basically went from 708 to 703. And so what I wanted to actually go through were these more intricate circles, because this is where you actually find the properties, or this is where you'll actually find condo density. And so what you'll see is CO1 and CO8 are at the top there, and those are the two primary downtown neighborhoods. Like that's where you're gonna find Toronto downtown condos. Both of those have seen drastic run-ups, like over 6% growth for both of those month over month. So if that doesn't stand to prove that people are coming back downtown and that there's still demand for these, again, entry-level price point condos in strong core neighborhoods, like that's it. They went from basically 840 to almost 900,000 for CO1 condos, and from 807 to almost 870 for CO8 condos. Now, where we're starting to see a little bit of pressure kind of let out of this so-called bubble, if you want to say, like where we're letting a little bit of pressure out is on these perimeter style condo areas, because again, there is more pressure to get downtown. So W06, which is Mimico, it's probably one of the second most popular kind of condo dense area, that stayed relatively flat. So 865 to 862, not a massive change in prices. But then when we go north to CO7, that's directly on the subway line. So there's a lot of demand for that particular area there as well. You see prices went from 819 to under 800K. So we saw that drop by about 3%. And then if we go to EO9, which is Scarborough Town Center, we saw massive growth at the beginning of the year because there was such a big disparity between buying in EO9 and downtown. We were starting to see people go out there like crazy. And now you've seen the price drop from basically 700K to about 660. So becoming more affordable. And I think inevitably, just as a result of that entry level price point, we'll probably see that get pushed up a little bit more over the coming months. But there could be a really good opportunity if you're capped out at like 650 right now to be on the subway line in Toronto. Like, there it is for you.
Yeah, it's definitely interesting to watch those neighborhoods kind of ebb and flow as seemingly as the population kind of goes out of the downtown and then back into the downtown just based on the price.
Yeah. And where I think, so I wanted to go through just like quickly the like rental market changes. I don't know if you can see my cursor, but the top is February, the bottom is March. The average price for February was just shy of 2,400, so 2,391. If you look at kind of like the average, it says sold price, but it's rental price. And then if you look at March, we're up almost $100. And where I actually think the rental market is probably going to see, we're probably going to see upward pressure on rental prices as a result of these interest rates, because there's so much uncertainty that people are like, I was going to buy a house this year. Let's see what happens. And then we see a flood of people rush into the rental market to get like solid quality rental properties for the next year, right? So where I think this becomes interesting for investors that are maybe watching this, the rental price ratio to purchase price ratio in EO9 was awesome in December. Like I was actually handpicking like neutral or slightly cash flow positive properties in December of this year, because the rents in EO9 were almost the equivalent of what they were downtown. But if you're paying the same price and you're purchasing for $200,000 less, the numbers make a heck of a lot more sense, right?
Yeah, absolutely.
And so where I think it gets interesting is if we see this trend line stay the same, or like, let's say prices flatten off in EO9 and we start to see upward pressure on rents, I think we might see some cool opportunities pop up in EO9 again, potentially. So I'm definitely going to be keeping my eye on that for my clients, because we might see some opportunities for investors pop up right now.
Yeah, that's great, because I mean, you're probably talking about like almost $1,000 difference on a mortgage.
Mm-hmm. Yeah, totally.
To bridge that gap, and that's a big difference on a monthly basis when we're talking about cash flow for sure.
Yeah, so that's what I got for you guys today. Kind of just like, again, overall thoughts on what I think is going to happen in the market in the coming months. I think properties with secondary dwellings remain strong, because you have the rental income to substantiate that affordability. And I also think rental prices will probably grow as a result of the softening of the actual like purchasing market. AAA properties will continue to see demand given that inventory is still relatively low. And I think what's really important to understand is like people's desire to purchase property has not changed as a result of a 50 basis point hike. It scares you, because who wants to spend another $200 on housing, or $200 on housing when you're spending another $200 on gas right now, right? But that it doesn't take away the desire for home ownership. It maybe prolongs the dream or makes you feel like the dream is prolonged, but it doesn't remove the desire to own a home. And so I do think that AAA properties will stay, they're still going to be strong, and I think they'll still have growth in today's market, and in today's market, or the changing market. But I do think, again, like anything with unsavory features, a condo that looks over the garbage, or that doesn't have parking, doesn't have a view, doesn't have a lot of natural light, like those things very much so need to be accounted for. And I know everybody thinks that their property is the best property because it's their home and that they've made memories there. It's my job to be very objective about this and to be very realistic, to say, this is how it's going to be perceived by a buyer. Let's be realistic so that we can actually get this property sold for you. That's not just some like hope and a dream and we're setting the wrong expectations. If you don't have a great view, we have to adjust for that. If you don't have parking, we need to adjust for that. If you live on a busy street, we have to adjust for that.
Yeah, Emma, that's a fantastic presentation. Thank you so much. And I know that's, this really makes me just think of like, who's in your power team, right? Is it friends and family right now? And like you kind of mentioned earlier, like this is probably the time to be looking for the most experienced, the most adaptable, the most dynamic, and the people who've been in the market the longest, who have the experience to get you through. You know, if you're listing right now, you want the best on your team. And if you're buying too, I mean, this means there's buying opportunities. So if you're buying, it's also a great time to have the best on your team so that your power team can identify a good deal in this market as well. So
yeah,
Emma, great.
I was going to say one last thing to conclude on that. Don't mean to hurt anyone's feelings. If your family or friends are amazing and they're sharks or they're bulldogs, work with them. But if you're just tossing them a deal because they're friends or family and you don't want to hurt their feelings, but you don't have confidence in them, think about it, right? And the other thing too is about experience, because I know that I'm going to get someone. I had someone chirp me in the comments last time about, oh, you've only been in the industry for 7 years and you should be dealing with someone who's been in the market for 30 years. You have to deal with people who do their research, regardless of how long they've been in the marketplace. Yes, it's great if they, and to my earlier point, I've been through a couple of these, throw darts at the market and see kind of like what lets a little bit of air out. But I like to research from 30, 40 years ago to see kind of what happens, right? And so, again, if someone's been in the market for a year, but they've been killing it and they do their research, that's okay too. But like, make sure that you're working with someone who has their finger on the pulse and that understands what's happened in those cycles. It doesn't necessarily mean that they've been in the market for 30 years. There's been agents that I've dealt with that have been in the market for 30 years and I wouldn't trust them at all. And there's been agents that I've dealt with that have been in the market for a year and a half and I would trust them with my own home sale. But it's because they do the research and they care about what's happened historically. And those are the people that you want on your side at the end of the day.
Yeah, absolutely. That's perfectly put, Emma. And I think that's a great way to wrap this up, guys, is just make sure you have the best people on your power team. Don't let those emotions cloud your judgment. Make sure you're selecting the best people for you, and make sure you, at the very least as well, like if you didn't get it on the first run, go back and try and understand exactly what we were talking about today, because that will help you in selecting your power team as well. Like if you understand this stuff, you'll much better be able to assess a great power team member and somebody that's going to take care of you. So appreciate you guys following along with the Canadian Real Estate Channel. Emma Pace, thank you very much for joining us today. And we're going to be back with more market updates from all the markets you guys know and love. And we're going to see Emma again next month. So cheers, guys. I'm Adam JD Martin. This is Canadian Real Estate Channel. If you're not already subscribed, smash it right freaking now. Like this and share it with your friends so that they know what's up with the Toronto market as well. See you guys.